What a difference a day makes. That expression's normally used for a positive turn of events. You're having a bad day, then the next day, things are looking up. And I like it when people use that expression. It shows a positive attitude. And the day I'm referring to is one that relates to the market. And that was last Friday. Hello, I'm Jeff Moss, and welcome to All the Right Moves. It's all about mortgage rates. Last Friday, the inflation numbers came out, and it showed that inflation is getting worse. Surprise, surprise, surprise. It is another month of the highest inflation in 40 plus years. And since I don't do politics, I won't go into the reasons why we have this inflation. And the reasons are many, and reasonable people can disagree on their impact. And what we need to know is how this affects real estate. Interest rates are raised by the Federal Reserve to combat inflation. This in turn causes mortgage rates to go up. And as we know, when mortgage rates go up, less people can afford to buy homes. And look here at what rates have done since the end of December 2021. And this chart is slightly outdated because rates are actually higher now. And yes, rates will continue to go higher. We will see 3 more increases by the Fed this year alone. And after that, well, that'll depend on what inflation does. Rates will continue to go up even after inflation is slowed down and possibly reverse direction. Life is interesting. People tend to compare 2 situations to each other and draw a conclusion. That leads to a false outcome or decision. In terms of a recession, we all look to 2008. But why not 2001 or 1990? Well, they're longer ago. Plus, the 2001 recession was short. And that's why when we look at where we're going, we need to look at more than just the last stop. If we look at real estate activity in the last 2 years to predict the future, we'll be disappointed. That time is an anomaly that isn't normal in our business. Look at this chart. It shows a monthly showing index. See the line? That's what's normal. The low point of 85 is a result of the shutdown. Then the market took off to over triple that. Well, how about sales? Sales remain stronger than pre-pandemic levels. Will that continue? Probably not. Will we have a market crash? Probably not. Will we have a market correction? Probably. But what does that mean? A correction is a decline of 10% or greater in the price of a security, asset, or financial market. If home prices drop 10%, that's a normal correction in this situation. The good news is, when that happens, we'll start to see rates drop again, and prices of everything else will start dropping. And since I don't believe in crystal balls, I can't say when that will happen. And the last time we had this situation, inflation reached 14%. It's 8.6% now. And the prime rate then was over 20%. 2 years later, we were booming again. And no matter how high rates go, they will come down again. And on that more to come note, that's it for our show. Thanks for watching. We'll see you next time on All the Right Moves with Jeff Moss.